Hello everybody, so glad to see you all. Welcome to this online training. This webinar is an educational initiative brought to you by Bursa Malaysia Derivatives Berhad. During this 90-minute session, we will have the first 60 minutes of in-depth training and the remaining 30 minutes for questions and answers, so Q&A session. So you better get your questions ready and you can type it anytime in the Q&A box. So whenever you are listening to our speaker training, if you have any question at all, just type it using the Q&A box so that we can monitor it easily. And it's my honor to have Ms. Chong Ting Ting back with us to lead this training session. She had trained thousands of students about trading derivatives instruments made available locally by the Bursa Malaysia Stock Exchange. So today we are going to cover crude palm oil futures, or commonly we know it as a FCPO. We are not referring to the plantation stocks, and we are not also referring to the good or bad of using palm oil for cooking. It is about the futures. So here we have Ting Ting to lead the training session. Hello, Ting Ting. Have you taken your lunch?
Hey, hi, Casey. Hi, everyone. Not yet. It's still too early for me to have my lunch.
Really?
But very odd to have webinar at this hour anyhow. But you all have so many participants registered for that. That is very good.
Oh no, we can save time for them since they can like having lunch and then listening to us, right? Kill two birds with one stone, right? Make good use of the time.
Should I start?
Yeah, let's do it.
Okay, now I believe many of you already know who am I, and this should be the last webinar for English session. Subsequently, there's another 3 webinar session to be conducted by another speaker called Mr. Warren Ma. So today our session or this topic is about introduction to FCPO. Now I'm not going to introduce about myself because many of you should know who I am. Now you please just call me Ting Ting. Now, I need to do a disclaimer is because this particular webinar session is only meant for education. There's not a buy or sell call for either FCPO, FKLI, or even FM70. Today topics will be divided into first session is about understanding FCPO. Second session is about FCPO contract specification. Third session is about margin calculation. How do you calculate the FCPO margin? Fourth session is about users of FCPO. And the final session, we are going to talk about the resources of FCPO information. Where can you get the information and how do you learn to trade your FCPO, etc. Now, from futures perspective, as I mentioned to you, to understand what is futures, I'm not going to go through again because during webinar 1 and 2, we already covered. Basically, to understand what is futures, you need to know from 5 directions or 5 angles, which is definition of futures. Second is the terminologies, meaning those commonly used terms in this industry. The third areas will be product available in Malaysia. The fourth areas will be the underlying market. As I mentioned to you, futures is a derivative products, meaning it derived from an underlying market. And the last areas will be contract specification. Again, layman terms for contract specification is like your user manual. That means before you want to trade any futures contract, first thing, please take the contract specification and start to understand what is exactly about these futures. Now, for today's session, we are going to focus on these 3 areas: the product available, the underlying market, and the contract specification. These are all the products available under Bursa Malaysia Derivative. We divided into commodities and financials. Now you can see that those highlighted in the star are those traded under Bursa Malaysia. We have CPO futures, FBM KLCI futures, which we already covered during webinar 2 on FBM KLCI futures. And today our focus will be on CPO futures. Now, futures, your underlying is the crude palm oil. The picture is very clearly stated what is crude palm oil. If you do not know, this is exactly how the crude palm oil looks like. And the right-hand side is the crude palm oil futures, which is your futures contract. Again, the underlying products is the crude palm oil, which you can't see it because outside there are physical players. They are buying and selling outside of the actual market. And the future side will be the crude palm oil futures. Our focus for today's webinar session will be on these crude palm oil futures. Now, how to buy and sell crude palm oil futures? Again, if it is a bullish market or if it is an uptrend, you long, or what we call as you buy. If it is a bearish market or it is a downtrend, then what do? You sell, or what we call it as short. You buy low and you sell high. Again, if you are expecting the market to drop, what do you need to do now? You sell first. If you are anticipating the market to go higher, then you buy at this particular price. When you buy a FCPO contract, how do you close it? You close it by selling it. If you start by selling a futures contract, eventually how do you close it? You buy back. Now, if you look at the diagram from the left-hand side onwards, you buy at the lower level. Eventually, when the market moves higher, you sell. And if you start by selling, eventually when the market drops, you buy back. So this is how you trade your futures. First question, give it a thought. If CPO production announced is lower than expected, should you buy FCPO or should you sell FCPO? I give you 30 seconds, give it a thought, and if you know the answer, you can type it at the answer box. Now, I give you a tips. I give you a tips. Normally, when you want to analyze whether the market should go higher or lower, one of the direction for you to analyze will be from the perspective of demand and supply.
Okay, there's some response saying like buy.
Okay, now if CPU production announced is lower than expected, meaning what? Your supply is higher or your demand is higher? In this case, your CPU production announced, meaning your supply
is lower,
is
right?
higher or lower.
Yeah.
So from that perspective, you should buy FCPO because your supply is lower. When your supply is lower, your supply is lower, you should go and buy FCPO because you will anticipate that FCPO price will be going higher. Now, second question. If stocks expected to increase, should you buy or sell FCPO? Again, coming from the perspective of demand and supply. I give you 10 seconds, give you the thought. Okay, stocks expected to increase, meaning what? Your supply is expected to increase, which is your supply is higher. That's why you should sell FCPO. Now, how do you buy and sell? This is the actual trading platform. Can you see when you buy and sell is exactly like how you buy your stocks. So it's the same methods to do your FCPO. Now, this is the actual trading platform, the actual screenshot that I already screenshot previously. When you buy one FCPO, let's say you buy it at 2,200. So what do you need to do is you just click buy the action at the price of 2,200. So in this case is you anticipate the crude palm oil price should go higher. So you buy at current level, which is at 2,200. Let's say subsequently, when the market moved to 2230 and you believe that current level, the price already at the highest level. So at the price of 2230, you decided to sell. So what do? You just key in to sell at 2230. So technically, you make these 30 points of differences. Now, how to calculate your profit and loss? Very simple. It's very similar to how do you calculate your FKLI, but it's just that for this FCPO, the calculation is different, slightly different. Now, again, if uptrend, you long, downtrend, you short, you buy low, sell high. So long as you fulfill the requirement of buy low, sell high, you are making a profit. It doesn't matter you start by selling high. Even you start by selling high, eventually you manage to buy at a lower level, you will make a profit. But if anything opposite of this, buy low and sell high, then you are suffering a loss. Now, let's say, for example, 1st of August, You long one FCPO contract at 2,200. 3rd of August, if you decided that right now the price already at the highest level, you sell one contract to close the position, you sold it at the price of 2,230. So will it be a profit, a loss? How much? Now, each point for this is equivalent to 25. I'll explain to you in a short while when we comes to the contract specification. You just calculate the difference, then you times with Ringgit Malaysia 25. So you can see the difference is what? 30 points. Each point is 25. That means it's equivalent to what? This is how you calculate. You just take 2230 minus 2200 times Ringgit Malaysia 25 equivalents to 750 of profit. Why is profit? Because you buy low and eventually you sell at a higher level. That's why this is a profit. Now, exactly this exactly how do you buy and sell. So this is the trading platform. You buy at 2200, eventually you sell at 2230. So if this is the actual scenario, you make the difference of 30 points, which is equivalent to 750. Now, let's say, for example, if 1st of August, you short one FCPO contract at the price of 2,700. And 3rd of August, you bought back, let's say you long back one contract at the price of 2,670. Again, is it a profit, a loss? How much? I believe many of you already have the answer. So what do you need to do is you just take 2,700 minus 2,670, 2,670 times Ringgit Malaysia 25. So you are having a profit of 750. Again, because when you sell at the highest level, and when you buy at a lower level. That's why you will have a profit. So your profit is 750. Now, again, if your account you are having 6,000, your initial cash you are having 6,000. Now, let's say, for example, you make a profit of 750. So right now, your cash balance is equivalent to 6,750. This 6,750, you can withdraw any point in time. That means, for example, right now, I saw it in the morning. Right now, let's say at 9 o'clock, I request, let's say at 11 o'clock, I request to withdraw. So if I request to withdraw, supposedly by the afternoon or after lunch break, you will get your money in your bank account. So it's unlike your stocks. Your stocks, when you sold it, you require 3 days before you can get your money, or some of the broking house, you require 4 days or 5 days to get your money. But for futures, it's very direct. If you decided to sell it today, you can request to withdraw any point in time. Now, this is exactly how the actual trading platform looks like. You don't need to calculate by yourself, but for you to understand how to calculate is very important, because when you want to set out your trading plan, or you want to manage your risk, this all takes into consideration. So understanding how to calculate is very important, or else your trading platform will show you very easily. They will show it to you. Even let's say, for example, the market moved by 1 point, you don't need to click the refresh button. The system will auto calculate for you, immediately mark to market, and they'll calculate for you all your P&L. Now, how to calculate your net profit and loss? Very simple. For our industry, futures, all the commission will be charged based on absolute figures. I repeat, all the commission charged are based on absolute figures. It is not by percentage, unlike your stocks. Normally, for stocks investment, every time when you buy a stocks, they were based on your stocks value. But for futures, it doesn't matter whether you buy at 2,200, you buy at 2,400, or even you buy at 2,600, the commission charge will be absolute figures. Now, many of the brokers, when they charge it to you, they will include the necessary fees. I will show it to you in a short while. Now, this is how we calculate. So how do you calculate? You take your net profit and loss will be based on your gross profit and loss minus your fees. Now, I'm going to show it to you how do you calculate your fees. All the brokers in Malaysia, for futures brokers, many of them, when they quote it to you, they quote it included exchange, clearing, and brokerage. That means they included everything. They will tell you that every contract, how much do they charge. So if you just want to make sure that the charge included all the fees, you just reconfirm with them. Now, when they charge it to you, they will charge it included exchange, clearing, and brokerage. Exchange, the fees is going to Bursa Malaysia, and the clearing fees will be going to the clearing house, and the brokerage will be going to the broking house. Now, there's no stamp duty, there's no SST at this moment. So how do we calculate? For example, if the brokers charge you, let's say, for example, per contract, they mention to you that it's Ringgit Malaysia 15. So when you do your calculation, you need to times 2. Why times 2 is because when you buy, you need to pay 15, and when you sell, you need to pay another 15 Ringgit Malaysia. So when you buy and sell, I assume that you only buy and sell one contract. So when you buy, you pay 15. When you sell, you pay another 15. So the total will be Ringgit Malaysia 30. So every products and every brokers, they will charge differently. Please check with your brokers. On generally in the industry is within about 15 per contracts until 25 per contracts. So please check with your brokers respectively. So when you have 15 as your brokerage, or what we call it as your cost or even your fees, how do you calculate your net profit and loss? Is you're taking your, let's say, assuming that my gross profit is 250, I take 250 minus my 30, Ringgit Malaysia 30, my net profit and loss will be 220. And please bear in mind that normally by one take in the industry, you are able to cover all your costs. I repeat, normally by one take, you're able to cover all your costs, or normally by 1.5 take, you're able to cover. Now in stocks, this is very difficult to be achieved. It's not so easy to cover all your costs within a take. Now, second session, we are going to look into contract specification of FCPO. How do you dissect this FCPO contract specification? Again, if this is the first session that you're joining us, contract specification is like a user manual. So for those who find that this word is a bit difficult to understand, don't worry. Contract specification is like a user manual. Whenever you want to know anything about this futures contract, first thing, go and take the contract specification and start to read the contract specification. And this contract specification is quite short. Normally, on average, is 1 A4 page. You're able to cover all the contract, the details of the contract itself. Where do you get your contract specification? The same. You go to bursamalaysia.com. Once you click on bursamalaysia.com, you click on derivative. Then at the left-hand side is the products. So once you click on the products, there's a commodity derivative, equity derivative, and financial derivative. So for CPO, it will be under commodity derivative. So once you click on it, this is exactly how it looks like. I screenshot from the website that just now I mentioned to you, which is bursamalaysia.com. Now, can you see it's actually very short? If you discard all those not necessary for you, like for example, those delivery ports, those delivery grades, etc. For retails, you don't need to know this all. So basically for you, it's about less than 1 A4 size page. Now, first line, the underlying instruments is crude palm oil. The contract size is 25 metric tons. That means every contract is equivalent to 25 metric tons. Now, 25 metric tons, I believe you should know is how heavy it is. It's a lot. I mean, basically, if you go and calculate and convert to kg, you know is a lot. It's quite huge. Now, the minimum price fluctuation is Ringgit Malaysia 1 per metric tons. That means every time when it fluctuates, is Ringgit Malaysia 1. Every time when it moves, for example, 2,200, the next level will be 2,201, and the subsequent level will be 2,202. Another level will be 2203, 2204, 2205, etc. It cannot be 2200.5, cannot be 2201.5. It must be Ringgit Malaysia 1 per metric tons. Now, what is exactly this contract size and minimum price fluctuation means to you? Now I show it to you. How do we calculate? This is the actual trading platform. A screenshot from the actual price screen. Now, let's say if you look at the January 2018, the price for the palm oil during that particular time will be 2767. So if you want to calculate the contract value, how do you calculate? You just take this 2767, you times with 25 metric tons, because every contract is equivalent to 25 metric tons. You times with Ringgit Malaysia 1. That's why each contract value is equivalent to 70,000. Now, normally in our industry, we'll just ignore this times 25 metric tons times Ringgit Malaysia 1. Usually, we'll just directly put times 25. So it's very simple for you to understand, meaning every point's differences is equivalent to Ringgit Malaysia 25. Unlike FCPO, every point is equivalent to Ringgit Malaysia 50. This is because every contract size is equivalent to 25 metric tons, and every minimum price fluctuation is Ringgit Malaysia 1 per metric tons, the value. So your contract values is you take 2767 times 25 metric tons times Ringgit Malaysia 1. So actually every contract values is equivalent to 70,000. Now again, I mentioned to you, our industry normally will cut short, we'll just put times RM 25. So this is how you calculate it. Now next, the contract months available for you to trade, this is a lot. You have spot month which is the current month, and the next 11 succeeding months, that means subsequent months, and thereafter alternate months up to 36 months ahead. That means technically from now onwards, you can trade 3 years ahead. Because FCPO, mainly the marketplace mainly coming from hedges. That means sometimes they will need to hedge using their CPO. Now subsequently at the end of the session, if you still remember, during webinar 2, we did mention to you those market players for FKLI. The same applies to FCPO. We have hedgers, we have arbitragers, we have speculators, which I will explain to you in a short while. Now, for example, if today is 20th of March 2018, so your spot month will be when? For information, the last trading day for FCPO will be on 15th of each month. Unlike your FKLI, the last trading day will be what? On the last day of the month. But CPO, the last trading day will be on 15th of each month. So if today is 20th of March, your spot month will be April, because already past 15. So your spot month will be April. Then your subsequent 11 months, can you see May, June, July, August, September, October, November, December, January, February, March. Then alternate month, May, July, September, subsequent. You see many months. Now, these are all the months that you can trade. Unlike FKLI, you can only trade 4 months. For FCPO, you can trade many months. But as a retail investor, which month should you trade? I'll explain to you right now. Now, if you are retail investor, which month should you trade? For you, normally you will trade the 3rd month. Okay, you will trade the 3rd month, which is the July. Can you see this April is the spot month? 2nd month will be May. 3rd month will be June 2018. So normally you will trade the 3rd month. 3rd month, which is what we call as a benchmark month. So whenever people refer to you what is the CPO price, people are referring to the 3rd month, which is June. Now, one of the reasons why people are trading June, because majority of us, we are speculators, we are retail investors. Now, you don't deliver or CPO. So in that case, because spot months, there's a tendency for you to go for physical delivery when it is expired. So normally you trade the 3rd month. Can you see the 3rd month, the volume is also the highest, which is at 23,000. So normally you will trade the benchmark month, which is the 3rd month, June. Now the trading hours will start at 10:30. For those who cannot wake up, 9 o'clock for stocks, FKLI is 8:45, it's too early for you, then this product is definitely suitable for you because you just need to wake up at 10:30 and the trading hours is from 10:30 to 12:30 and the second session will start at 2:30 until 6. Previously, the trading hours for FCPO start at 3 p.m. But I think beginning of this year, somewhere in March, if I'm not mistaken, they already changed it from 3 o'clock to 2:30 in the afternoon session. So afternoon session will start from 2:30 to 6. And can you see the rest is not so important for retail investor? The second part that is more important for retail investor to know is the final trading day, or what we call it as a maturity day. This will be on 15th of each month. 15. Unlike FKLI will be on the last day. Now, can you see, for example, in this case, 15th of April, your spot month will be April, FCPO April. Can you see the first line? But if today is 16th of April, your April month already expired. So your May will become the spot month. June will become the second month. Your third month will be July. So normally as a retail investor, you will trade on the third month. I repeat, if you look at these slides, 15th of April will be the last trading day. So your FCPO April will still be there, but on 16th of April is the first day, so your April month already expired. So your spot month will be May, the next month will be June, subsequent month will be July, the third month will be July. So as a retail investor, you'll be trading on third month, which is July. I'll show it to you at the end of the session using Bursa Marketplace. How do you submit your orders and how do you select the months? I will show you exactly as per today itself. Now, this is what I mentioned to you, benchmark month. So if spot month is April, next month is May, the third month will be June. So if you're a retail investor, you'll be trading June contract month, the third month. Anyhow, no matter what, you just trade on the third month itself. Now, when it comes to session 4, margin calculation, when previous session during webinar 2, we did calculate for FKLI. Today, we are going to calculate for FCPO. At the same time, we are going to look at the variation margin as well. Now, if you look at today, the margin, there are two different margin. One is called initial margin, one is called variation margin. Now, in Malaysia context, initial margin is like what? The English term initial is like first, the beginning part or the first part. Now, the initial margin itself, layman terms called deposit. I repeat, margin, layman terms called deposit. For example, today you go and rent a house. Do you need to give a deposit? Because why? People worry that you run away. So this margin for futures is the same thing. So when you initiate or when you buy or sell a futures contract, you need to pay a margin. Now margin divided into two. One is initial margin and another one is the variation margin. I will explain to you in a short while what is this variation margin about. Now let's just look at initial margin for FCPO. These are all the products. Last webinar, we already covered for FKLI, FM70, and the last part will be FCPO. Now, right now, the margin required for each FCPO contract is 4,500. I repeat, this is already prescribed by Bursa Malaysia Clearinghouse. Each contract, if you want to trade FCPO, you need to pay or deposit or bank in 4,500. So when you bank in 4,500, you can own or you can trade one FCPO contract. Now, for example, if you are being given 50,000 of capital, how many contracts of FCPO can you trade? I already mentioned to you, initial margin for FCPO is 4,500. So let's say, for example, right now it's 50,000. If you have 50,000 or in your trading accounts, you own 50,000, how many contracts can you trade for FCPO? Now, I'll give you 10 seconds. Please do a calculation. How many contracts can you own? Now, how do you do the calculation? You just need to take 50,000 divided by 4,500. So you can own 11 contracts. Now, for those who cannot understand, how do you calculate this initial margin? It's very simple. If I give you a very layman explanation, let's say, for example, if today you have Ringgit Malaysia 10, you take Ringgit Malaysia $10, you go to hawkers, or you go to a store, you want to buy a nasi lemak. Each nasi lemak costs you Ringgit Malaysia 2. So how many nasi lemak can you buy? You just take $10 divided by 2 Ringgit Malaysia, because each packet is Ringgit Malaysia 2. So technically, you can buy 5 packs of nasi lemak. The same, if you are being given 50,000, if each contract's worth 4,500, you can buy 11 contracts, or you can start by selling 11 contracts. Now, what is variation margin? Variation, as a layman terms, is like difference. Now, what is difference? Another word not so nice to call is, if you look at the title of this particular page of the slides, we call it as margin call. I believe many of you should know what is margin call. The words call meaning what? They are chasing after you, meaning they keep on calling you because you're having a shortage of margin, or you do not have sufficient margin. Now, I will encourage you, there's a movie called Margin Call. If you can go and search for this movie, give it a watch, because this movie is very, very interesting, very nice, called Margin Call. They based on the story of 2008, and if you go and watch it, right, you will like it a lot. Now, let's go into variation margin. What is exactly this variation margin? Variation margin meaning that any point in time, if your cash balance is less than the margin required, meaning in this case, at any point in time, if your cash balance is less than your deposit, then you have a margin call. I repeat, at any point in time, if your trading account, the cash balance is less than the margin or the deposit required, you're having a margin call. Now, I'll give you an example. Let's say initial margin for FCPO currently is at 4,500. If your trading account is having 5,000 of cash balance. Now, let's say if you bought one FCPO contract at 2,200 and market dropped to 2,160, although you not yet sell, there's an unrealized loss. Am I correct? Because when even you not yet sell, we still need to mark to market and start to calculate your profit or loss. But because you not yet sell, this is an unrealized. Once you sold it, it's a realized. So in this case, 2,200 market drop to 2,160. The difference is 40 points. Each point is 25. You take 40 times 25 is equivalent to 1,000. Now this is a loss because you buy high, you sell low, assuming you're going to sell at 2,160. So you sell at lower level. So in this case is a reverse, or what we call as the other direction of buy low and sell high. So you have an unrealized loss. A realized loss of how much? 1,000. So what you need to do is you take 5,000, you minus off 1,000. Although it's unrealized, they will still take into consideration. So 5,000 minus 1,000, your cash balance is equivalent to 4,000. But the margin required is 4,500. So how much will be your margin call? Your margin call will be 500. Meaning what? You need to bank in 500 immediately. So normally when people trade, people don't bank it exactly at 4,500. If not, even the market move by 1 point, you already need to bank in. Normally people will bank in slightly higher. For example, you bank in 5,000 to own one CPO contract, or even you bank in like 5,500 or even 6,000, 6,500. This all depends on you. But this is the margin call. So at any point in time, let's say you are below the margin call, the brokers have the rights to force liquidate your position. I repeat, the brokers have the rights to force liquidate your position, but it depends. Many of the broking house, their margin policies, they are different. So generally, I just want to let you know, if you are below 4,500, meaning that you do not have sufficient margin, the brokers might force liquidate your position, or else they will call you to ask you to bang in or top up immediately. So it's very simple. So margin call is just simple as what? This variation margin is as simple as you do not have sufficient margin. I repeat, layman terms means that you do not have sufficient margin. Now, this is how it works. This is an actual example. This is the trading platform. You do not need to calculate by yourself. What you need to do is you just need to read this. Can you see that the initial margin required is 8,000 because the client is holding 2 contracts? And in this case, there's no margin call. Can you see the margin call is 0 because the client's having an equity of 16,000. You look at the left-hand side, the bottom, the equity is 16,000. That's why the margin required is only 8,000. In fact, the client is having excess margin. So of 8,500, that's why there's no margin call. Now, in this case, this particular example, there's a margin call. The client's initially having a cash balance of 8,000, but the client's having an unrealized of 3,000 plus, the equity is 4,900. So if you take the initial margin is 7,200, why 7,200 is because during that particular time, if you know that this screenshot is many years ago, if during that time the margin required is slightly different, maybe got 3,200, etc. So the initial margin required is 7,200. In this case, the client's having a margin call of near to 2,000. So it's very simple for you to understand. So when you look at the eligibility, anything below 100%, there's a margin call. So this all you don't need to calculate by yourself. In your trading platform, the portfolio will be reflected to you. It's very simple. Now, when it comes to session 4, users of FCPO, the same applies for your FKLI. If you still remember during webinar 2, I did highlight to you that we have 3 players for FCPO or for FKLI. Are the same. We also have hedger, we have speculator, and we have arbitrager as well. Now, how it works is the same scenarios as per the previous, exactly the same as your FKLI. Hedger is like buying a protection. Now, I'll give you an example for this particular hedger. For example, you are a palm oil producer. Now, if you are going to sell, you anticipate that upcoming 6 months, you are going to sell CPO that you already produced, for example. Now, if you are going to sell, but you anticipate that the price is going to drop by then, 6 months forward, going forward, the price might be dropping. So what do? You go and sell futures right now, FCPO futures right now. So in a way, you are like buying an insurance. So it's quite similar to FKI, the similar situation. Now, goes to speculators. Speculators exactly is like you and me. If we forecast the market is going to go higher for FCPO, we long futures, FCPO futures. If you forecast the market to be bearish, then you short FCPO futures. Now, for arbitrager, this is very similar as per the explanation that I explained to you. As a layman explanation, is very simple. For example, if your iPhone, let's say, if you cannot understand CPO, I give you a layman explanation. If iPhone 10, you're going to buy, let's say in US, they're selling at 9,000 ringgit Malaysia, equivalent to 9,000 ringgit Malaysia. Now, if you included all the currency exchange, everything plus your delivery cost, if you deliver to Malaysia and start to sell in Malaysia, Malaysia price should be selling at 9,000 as well. But what if Malaysia only selling, let's say at ringgit Malaysia 7,000? If everything take into consideration already, so what do? You buy in Malaysia and you sell it in US. So you can make a riskless profit. Can you see the last line? The keywords is riskless profit. Because supposedly all the price for the same products across the market should be at the same price. Or even within the market should be at the same price. If not, you can make a riskless profit. Now, comes to this session 5. the resources of futures information. I'm going to show it to you exactly as per right now for our FCPO market. How do you submit your orders, etc. And where can you get all the information like market outlook, all the brokers available, etc. in the market. Now this is the bursamarketplace.com. I'm going to show you for FCPO, how do you do that? Now, for those who just joined us, if previous webinar you did not join us, you may refer to the previous webinar playback and you register by yourself. I'm not going to go through about this registration process. Now, what you need to do is you go to bursamarketplace.com, and for those who not yet register, you just need to click register. Then you type in your email and your password, or you can register via your Facebook, Twitter, or Google+, or you just type in a new email and password. Then once you register, you just need to click this. I show it to you in a short while. I will be coming back for these slides. Now I'm going to show it to you the exact trading platform. Can you see the screen? Already logged in. What you need to do is you just need to click at this briefcase, something like a briefcase. You just need to click that.
Hi, Ting Ting.
Yep.
Are you showing your browser right now?
Yes. Can you see that?
We are not seeing your browser yet. We are seeing still the slide. So maybe you need to click share and choose your desktop.
Wait. Click the new share screen. Can you see that?
Yes, we are seeing it now.
Oh, okay.
It works.
Now, when you are at this is the Bursa Marketplace. So what you need to do is, I'm going back to the slide in a short while, but I'm going to show you how do you place your orders in the actual environment. But this Bursa Marketplace is a simulation trading platform. I repeat, this is like a simulation trading platform. It's like a virtual account. Now in Malaysia, majority of the, I wouldn't say majority, I would say all the brokers, they do not have a simulation platform. That means once you open your accounts, if you are going to start your trading, you need to bang in the actual money and you can just play around, because whatever you submitted, it will be traded immediately. Now, Bursa Malaysia, they actually created this website or this page for you to test it out. Exactly how do you place your orders, etc. before you move into the actual environment. Now, what you need to do is when you log in already, you just need to click this briefcase. Can you see futures? So what you need to do is you click at the futures, because already in the futures. Once you click at the futures, can you see this all? Now, let's say, for example, I don't know why it is not. Let me re-log in for you, because maybe I log in too early. Oh, hold on a sec. Okay, let's say I re-log in. You can log in your own. For those who are registering, you can register right now. Okay, once you are here, again, I click on this briefcase. I click on futures. It's a bit slow. So once I'm in the futures, can you see this all? So what you need to do is, if you are first time logging in, you need to click this create futures trading plan. If previously you already created, then you forget about these steps. I repeat, for those first timer, what you need to do is you click this create futures trading plan. Then you type in the futures trading plan name that you want. Then at the bottom description, if you want to describe, you just describe. For example, you put your own name. Then you say that this particular plan is for FKLI or FCPO. Then you click create plan. Now, I show it to you because I already created. So what I need to do is, can you see this column called add futures contract? So for those previously you already registered, you already opened, or you already submitted your FKLI contract, what you need to do right now is you click add futures contract. So when you click add futures contract, meaning you are going to buy or sell at this moment. And please bear in mind that this Bursa marketplace exactly taking the real-time prices. That means whenever you buy or sell, it refers to the real-time prices. Now, can you see that? I repeat, when you want to buy or sell, you just need to click Add Futures Contract. So once you click the Add Futures Contract, you need to do what? You need to select contracts. Can you see there are many contract months that you can select? FCPO, November, December, January, February, March. Remember, if you follow your contract specification, it's spot month and next 11 succeeding month, thereafter alternate month. Can you see alternate month? Up to 36 months ahead. Meaning what? Can you see right now you can already trade up to November 2021. But this is meant for hedgers, not for you. So as a retail investor, normally which month that we are trading? Which month? Third month. So third month is the months that we are going to trade. So your spot month is November, next month is December, your third month will be January. January 2015, January 2019. So you click on January 2019. Now, right now, the current market price is at 2202. You cannot select the price. In your actual trading environment, you can select the price. But because this is a simulation game, they just want you to feel it. They will allow you to take the market price directly. So at this moment, it's 2202. If you go and check the trading environment, the price is trading at 2202. This is the last traded price because right now the market already closed, supposedly to close at 12:45. So market already closed. 12:45 is FKLI. For FCPO should close at 12:30. So the market already closed. So the current price is 2202. So what you need to do is you can only choose the long or short. If you're choosing short, meaning that you're anticipating the CPO price from current level will go lower. I repeat, if you're choosing short, meaning that you're anticipating current price at the high side, you're anticipating the price should go lower. So you are selling. So if you anticipate that 2,200 should be the support level and the price should go higher, so what should you do? You buy. So it depends on you. So I give you maybe 10 seconds, you give it a thought whether you want to buy or sell. It is up to you. So let's say, for example, if I believe that the price should go lower, so I short. So once I selected short, then this stop price and target price we do not cover. That's why I'm not going to let you all know what to put. This is about the stop price. That means your cut loss level. So subsequently, what you need to do is you just click Save plus Close. So once you click that, can you see that it appears here? Now I'm going to enlarge the screen for you to see this. Can you see the first line? The contract, the months that I selected is January. It will expire on 15th of January. The position is short because I anticipate the market will drop. So the price that I already executed is 2,200, the third column. Then the last done price is also 2202 because right now the market already closed. Second half, if you already submitted your order, second half you can see the price will start to move and they will start to calculate your gross P&L. Like for example, on 16th of October, in this case, I submitted a FKLI contracts. I submitted a FKL contracts for October month. During that time, the market price is at 1729. But because the market already dropped, the last time price is 1702.5. That's why you can see I have an unrealized profit of 1,325. So can you see this is zero is because the market already closed. Second half, when you come back, you will see that they will start to calculate, auto-calculate. You don't need to calculate by yourself. But each point is 25, Ringgit Malaysia 25, they will start to calculate for you. Now, I'm going to show it to you. What if you decided to close this position? How do you close that? Can you see this open? Now, assuming I decided to close for this. So if I decided to close, I just need to click open. Then they ask you, are you sure you want to close this contract? Once you close this contract, it will be sent to close. So if confirm, you just need to click close contract. Can you see once I close it, they no longer appear at the top because top part is your net position, those positions that you not yet close. Now bottom part is all the position that are already closed. Can you see? Now this is the contract that just now I closed. So once closed, your gross P&L is final, 1,325. So long as I did not close, can you see this? If so long as I did not close, it remains open. So this is very simple. I repeat, how do you do that? If you want to buy or sell, you just need to click add futures contract. Once you add futures contract, you select the contract months that you want to do. As a retail investor, normally you do the third month, which is January. Now the question is, if you're going to ask me, can I do February if I anticipate that I'm going to hold longer than a month? Can I do February directly? The answer is yes. If you want to do FCPO February, you're welcome to do so. But normally as a retail investor, we'll do the third month because the third month is the highest volume. Highest volume meaning that the liquidity is high as well. So once you selected, you just need to click long or short. You cannot select the price. Again, I'm going to remind you, you cannot select the price. The platform is going to force you to buy at the current market price or sell at the current market price. But the actual trading platform allows you to select the price that you want. Then subsequently, if you anticipate the market is going to drop, you just click short. If you anticipate the markets to go higher, you just click long. Then subsequently, you just need to click save. Then you already submitted the orders. Okay, now I'm going to walk through this platform. What you can see is this is my actual P&L. But don't look at this because we don't really trade this platform. For me, this platform is for you to show it to you all. But as a beginners, this is a good platform for you to kickstart. At least you can test it out, your strategies, or you can understand exactly how they calculate, or you can understand better about these futures products. Now I'm going to come back to this just now, whatever I already run through. I repeat again, what you need to do is, cannot move. What you need to do is you click on this briefcase, you click futures. Once you click futures, if you want to buy or sell, you just need to click add futures contract. Then subsequently, you select either long or short. At the price, you just take whatever the market price given to you. Then this is your profit or loss. This is how you monitor your performance. And from the left-hand side onwards is whether you're buying FKLI or FCPO or even FM70 and which month, contract months that you're buying. If you're buying August month, in my case, the last day will be 30th of August 2017. Then the second column is the short because I short it. I anticipate that the market will drop. Then the date that I shorted is on 13th of August. Then the third column is the price that you buy or sell. Then they will calculate your P&L subsequently. How to close the position? You just need to click open. You click on this, then it will close automatically. Now, in the actual trading environment, you don't click open to close a position. In the actual trading environment, like in this particular example, if you long a FCPO futures contract, how do you close it? You just need to key in to sell. That means, I repeat, you just need to key in to sell. As per the previous example, I show it to you. So I repeat, how do you close a position? If you're having a long position, you just need to key in a contract to sell. Then it will close. Now, if you start by selling a future FCPO contract, eventually, how do you buy back? How do you close the position? You just need to buy back. So once you click close, it will automatically close. So how do you download the FTP? You just need to click on these particular slides. Now, for those who want to screenshot, you can screenshot and subsequently you can click. So you can download the FTP guide. FTP for us, we stand for Futures Trading Plan. Actually, it's not a planner, but it's just a simulation game for you. The name of this simulation game is called Futures Trading Plan. They call it as FTP. Now, upcoming, if for those who want to know more, because as I mentioned to you, webinars we can cover very short. You can go to Futures and Option Workshop organized by Bursa Malaysia Berhad or Bursa Malaysia Derivatives. There are a series of futures and option workshop that you can attend. How do you register? You just need to scan this QR code or you type this URL, you can register. It's from September to December. You just select the location or the states that you can attend, you go accordingly. As I mentioned to you, can you see there's a KL session, Ipoh session, JB session. We have option workshop as well, which is in English and Mandarin in KL, Penang, and JB. You can select the session that you want to attend. You can attend accordingly. But I'm so sorry to inform you that for Futures Workshop in KL and Ipoh is fully set out, which is going to organize at the end of this week. So for those who cannot make it, you can register as a waiting list. If there's any people giving out their seats, we'll inform you. If not, right, you can join us back next year. Now, these are all the series. Again, for those who want to register, this is the screenshot. You can register via this URL. And I just want to do a summary for today's session. 4 key takeaway points. Today, whatever we cover is about CPO. How do you buy and sell your CPO? Again, if you are anticipating the market to go higher, you buy FCPO at this moment. And subsequently, when the market go higher, you can sell. Then you can realize your profit. Then you calculate your profit and loss. Basically, each point is equivalent to Ringgit Malaysia 25, unlike your FKLI, which is equivalent to Ringgit Malaysia 50. The second part is we dissect your contract specification. So like for example, the trading hours will be 10:30 to 12:30. You can go and download via your Bursa marketplace, bursamalaysia.com. You can download the contract specification for FCPO. Now, the third part, the third key points will be the margin calculation. How do you calculate it? For FCPO, each contract required 4,500 of margin. I repeat, each contract required 4,500 of margin. So the initial margin for each FCPO already fixed at 4,500. Now, normally, this initial margin will change, but how often they change will depends on the market volatility. I give you an example. If the market is very volatile, Bursa Malaysia Derivative might increase this initial margin. Second, another reasons is, let's say if we are having a long holiday, then Bursa Malaysia Derivative might increase the initial margin requested as well. Now, the last margin change, if I'm not mistaken, is somewhere before the general election. Subsequently, after that, they never changed before. I think last week they changed the FM70 only. The rest, like FKLI, FCPO, they remain 4,000 and 4,500 for quite a number of months already. They don't change so often if the market is not that volatile. Now, the last one is we talk about users of FCPO. Again, they are like FKLI, they are arbitrager, they are speculators, and they are hedgers as well. So this comes to the end of my presentation for this webinar session. And my quotes again, it comes to successful trading starts with good trading habits, because I always believe that trading habits is very important, especially when you kickstart your trading for either futures, stocks, or whatever investment products. Now, if you want to know more about the workshop or even some question that you want to ask me personally, you can follow me through my Facebook. This is my Facebook. Please do not send friend requests because I have many friend requests that are not yet approved. You just need to follow me through my Facebook. So this comes to the end of my presentation. Thank you very much. And I pass it back to Casey Lau.
Hello, Ting Ting. Thank you very much for sharing all this good information. I think the first question is pop up on the first minute of the introduction. They're asking where to buy your book.
Oh, where to buy my book?
Yes.
Actually, you can buy it in any of the workshop, any of the bookstores, like even Popular, Kinokuniya, MPH Online, or even if you don't want to go to the bookshop, you can go directly to MPH Online. MPH Online, you can manage to get the books. And this book is actually written for Malaysian. That means if you want to kickstart your stocks or even futures trading, right, you can start with this book because all the example given is based on Malaysia environment. That means it's based on Bursa Malaysia. Every examples that given to you, when you read it, you can apply into Malaysian market.
Nice. So we are going to have a Q&A session, and for those attendees, if you have any question, you can always use the Q&A box to type in. So you can ask anything at all regarding FCPO, FKLI, or futures contract. And we have the first question here by Nicola. So you can close at the last done price during the break. No need to wait for the next session to open, is it?
Oh, okay. If you're referring to the Bursa marketplace that I showed it to you just now, because this is a simulation trading platform only, so you can actually close at any point in time, even during lunch break, etc. But because I bought and closed at the same price because the market already closed, so there's no last done price. That means when I bought it, the last done price is just now, the example show is 2202. So when I close it, I also need to close at 2202 because the market is not moving. So the last done price is at 2202. I can close it. But in the actual trading environment, you cannot close when the market already closed. For example, for Malaysia, market closed at 12:30. So after 12:30, when you submit your orders, right, your orders will not get traded. So it's slightly different because the Bursa marketplace is a simulation platform. If the Bursa marketplace simulation platform, you can do so. Actual trading platform, you cannot do so. Once the market is closed, it is closed.
Yeah, so basically, maybe Nicola got confused with the Bursa marketplace, right? Bursa marketplace is just a demo where you can go in or do simulation. So it's fake. It's not real. It's just for you to practice and see how this works. But when you really trade with your money, so you have to do it with your brokers.
Yep. Sorry, can I elaborate a bit about the trading phases, because we do not have the time to cover the trading phases.
Okay.
Now, for futures, like for example, very simple, you just need to remember three trading phases. One is 30 minutes before the actual trading hours. One is 30 seconds. Another one is 5 minutes. I repeat, one is 30 minutes. One is 30 seconds. Another one is 5 minutes. What does this mean? Now, for example, your trading hours for FCPO starts at 10:30. 30 minutes before that is 10 o'clock. This 10 o'clock we call it as a pre-opening phase. Now, pre-opening phase meaning that during these hours, you can start to submit your orders, but nothing will be matched. Now, even your brokers, they cannot submit before 10 o'clock. They can submit after 10 or at the start of 10 o'clock only. So this is what we call it as a pre-opening stage. You can only submit your orders. The market will open at 10:30. Whether you will get it at the opening price or not, it depends on the price that you submitted. Now, second phase is what we call as 30 seconds. 30 seconds before 10:30, which is at 10 o'clock, 29 minutes, 30 seconds. This phase we call as non-cancellation phase. Non-cancellation phase meaning that when you submit orders, previously between 10 o'clock to 10:29, 30 seconds, you cannot cancel any orders subsequently. Until 10:30, the market opens, then only you can cancel. This is what we call as non-cancellation phase. Then the trading hours will start at 10:30 until 12:30. Now, 5 minutes before the break, which is at 12:25, we have a pre-closing stage. This pre-closing stage is exactly like the pre-opening stage, exactly similar. So during this stage, you can only submit your orders, but nothing will be matched. There's only one price will be matched exactly at 12:30. So I repeat, three trading phases that you need to remember, which is 30 minutes, 30 seconds, and 5 minutes. So 30 minutes is just before your market open, which is at 10:30. 30 minutes before that is 10 o'clock. 30 seconds is 10:29, 30 seconds. and 5 minutes before the first half closing, which is at 12:25. So these are all the trading phases that you need to understand. Because I noticed that many of the stocks traders, they do not know that actually stocks also divided into different trading phases. For example, you have 4:45 pre-closing stage, you have 4:50 last trading at last, then 5 o'clock the market close. But many of you might thought that the stocks actually close at 5 o'clock. So for futures also, they separate into a few different trading phases. So technically, after 12:30 market close, you cannot trade. Then 2:30 onwards, you can start to do your trading until 6 for FCPO.
I see. So mainly the trading phases is for the people who are in the industry to do the orders, right? So for
yes.
For us, but the timing is an issue as well, right? So you don't want to get caught in that phase.
Yes. That's why as a retail investor, you also need to know these all trading phases. If not, right, subsequently you will say that, hey, how come 12:25 I submit orders? The last time price is exactly as the price that I want. Why my orders is not my order did not get matched? The reason behind is because that is pre-matching phase. It will only match once the market close or last traded at 12:30. So you need to know. Another thing is also, as a retail investor, normally we will not encourage you to trade during volatile times, like for example, at the opening stage, maybe 15 minutes at the opening stage and the near approaching to the closing stage, last 15 minutes. So normally these are all the hours that we don't encourage retail investor to trade, especially if you are beginners. Because when the market is volatile, sometimes it's good for beginners, but sometimes it is not. Because you see, as an investor or traders, sometimes volatility to you might find that it's good. If the market don't move, I don't make money. But the problem is, if you are beginners, you do not know how the market is going to react. For example, we experienced before, last 1 minute, the market fluctuate before, especially for CPO, let's say 30 points. If you take 30 points times 25 is how much? 750? Or to you, within 1 minute, you might be making 750 or you might be losing 750. So sometimes for you, you need to understand this. Because many of you might be thinking, hey, I can make 750 ringgit Malaysia. But do you know that at the same time, you might be losing 750 as well? So certain trading hours might not be suitable for beginners.
Okay, understood. Next question is asking where to see the chart for FCPO. Do we have a chart for that?
Oh, very good question. Now, technically, if you want to see a more comprehensive chart, you might want to open a trading account with your brokers. Once you open a trading account, all the brokers, I would say the majority of the brokers in the industry, they'll provide you with their trading platform. Now, when you're able to access to their trading platform, chart will be provided for you at no cost. Normally, I would say across a majority of the brokers. Some of the brokers, they do provide you 2 different versions of a trading platform. One is web, one is apps, or another one is mobile apps, one is your desktop apps. Now, if you're using a web version, normally they will provide you with a complete chart without any delay, and there's no cost. You can use it to view the chart. But if you ask me free of charge at this moment, I can't think of. If you want to go through Bursa Marketplace, this all, they will be only line chart. That means you cannot see some bar chart, etc. If you want to insert indicators, this all is definitely no. So if you ask me, the only option is you go and open your trading account with any of the brokers, then you can view all the charts. That means either FCPO or FKLI, some of them, they can even go back to 10 years of the historical charts that you can view. Then you can trade. And I do know that many of the brokers in the industry, they don't charge people for viewing the chart. They will provide you free of charge. And they are even provide you, for example, those simple indicators, 10 to 20 simple technical indicators for you to use it without any charges. If you want to use something more intermediate to advanced, then there are certain charges being involved. Other than that, you can view it at free of charge.
And by the way, when you open a trading account for futures, a future contract is actually free, right? You don't have to pay anything, so you get the chart, right?
Yep. Because unlike for stocks, you need to pay the 10 ringgit is for the CDS account, but futures you don't have. So there are brokers all available. Even you go through Bursa Marketplace, Bursa Malaysia website, you can get all the brokers in the list.
Okay, good. There's a question on Facebook. It said, Isabel, I want to know, is there any seminar regarding futures technical indicator? So do you have any seminar on that?
Technical analysis at this moment, we do not have. The reason behind is like this. Now, technical indicators are like trading plan and like, for example, risk management that we really directly goes in details for. That means when you go for trading plan and risk management, we are directly specifically mentioning about the historical data for CPO, FKLI, or even FM70, etc. Now, these all topics is not easily being Google search. Unlike technical analysis, actually when you learn technical analysis, when you apply to any of the products, more or less they react similarly. That means how you digest the information, or how you, when you insert the indicators, how do you analyze it? What will be the conclusion that you are going to make? It applies across the board. For example, you go for stocks, futures, the simple moving average, when it reacted the same thing. And this all is very simple and easy for you to Google search. For example, you type in Google search, right? You can type technical analysis. There's so many websites or even YouTube that they teach you technical analysis. But less likely the class or even Google search that you can get a trading plan related to futures environment, or especially applicable for Malaysia products only. And the risk management part as well. What is the historical data? What is the risk that we are looking at when it comes to Malaysian market? There's a reason why Bursa Malaysia Derivatives prioritize those topics that are not easily being searched through website or even like YouTube, etc. So technical analysis is something that you can study by yourself. So at this moment, Bursa Malaysia do not have, but they might be having that in next year. I'm not quite sure. But Bursa Malaysia at this moment, they prioritize beginners with those topics that is not easily being searched, like your futures trading plan, which is so crucial. If you're trading your futures without any plan, you're going to suffer. So futures trading plan is a must. That means how to design your futures trading plan, how to execute your futures trading plan is something that you really need to learn. And it's not so easy for you to Google search. Another topic that is very important is risk management. When it comes to futures, many of you should know that the highest risk, many of you perceive that futures is having a very high risk. But the question is, risk, can it be managed or not? This futures risk, can it be managed or not? The problem is with many investors or traders for futures is they don't manage their risk. That's why we will dissect all the risks for you for futures trading in Malaysia and how do you trade it. But I repeat, technical analysis at this moment we do not have. But if you really want to learn, this is some things that you can learn easily through Google search or even YouTube, etc. Or even outside, there are so many classes that they provide you technical analysis class. And I just want to remind one thing. When it comes to futures trading, technical analysis or fundamental analysis only take about 20% that is going to decide whether you're going to win your trades or not. 20% only. Remaining is coming especially from trading plan and trading mindset, 80%. I repeat, when it comes to futures trading, especially futures trading, right? Technical, any type of analysis, it can be fundamental analysis, it can be technical analysis, will only secure you 20% of your winning trades. Remaining 80% is covered coming mainly from your trading plan. Trading plan meaning included your money management, your risk management, etc., and also your trading mindset. Many people lose money not because of they do not know how to analyze the market. It's because they do not have a trading plan, a proper trading plan, and also they do not know how to manage their risk, and they do not have a proper trading mindset.
Ting Ting, can you explain a little bit what kind of trading mindset we are talking about here? So like what should they be prepared
Like
when
for
getting to trade?
example, I give you an example. If you have a trading plan, they will solve many of your issue. Like certain very simple one. When you having a profit, many of you, a small profit, people tends to take already because they are very happy ma. Let's for example, in futures, in their lifetime, very difficult for them in one day, right? They can make 1,000 of profit, especially when the market is very volatile, right? In one day, for you to generate 1,000 profit is quite simple. But sometimes these kind of scenarios you never experienced in stocks before, so you will still take it. But subsequently, when you suffer loss, 1,000 you still keep, 2,000 you still keep, 3,000 you still keep. That's why we always tell people, like for example, if you do not understand futures, because many of you are beginners, I use an example for layman perspective. Stocks, maybe 20 cents, you resell your stocks and you start to announce to the whole world, hey, I'm making profit, and you start to treat people for dinner or lunch. But when you suffer loss, right, many of you, 20 cents, you still keep, 50 cents, you still keep, and you do not dare to tell people. And you are having a mentality in this way, you will think, so long as I do not sell, I'm not making a loss. But this is what we call as what? You are like an ostrich. You just cover your head and you pretend that you don't see your enemy. But actually the enemy is in front of you. That's why this kind of trading mindset or this kind of trading habits is very important for you to inculcate. Because many of you believe that you hold your stocks, you don't sell, you do not suffer loss. But in fact, you know that actually you're having a loss. That's why you see many people when they're having a loss, right? They will have many excuses not to open their laptops, not to access to their platform because they don't want to know the facts. But when they're having profit, right, they keep on pressing their calculators because they know that they're having profits. So these are some of the trading mindset that you need to know. There are many, many more trading mindset that's very, very important. And I find that many of the traders, they do not know. And one of the ways that you can overcome your trading mindset, I would say about 50% of your trading mindset is by implementing your trading plan. I give you an example. Trading plan. Before you go into the market, you already know what will be the price that you're going to buy. You already plan also how do you get out. If the market go against you, what is the maximum loss that you're going to take? You already calculated. And where are you going to take your profit? You already calculated as well. Because there are only two ways for you to get out from the market. Either by loss, that means you cut loss, or you take profit. Now, these are all in your trading plan. And by the time that you go, before you go into the market, you already know more or less what is your risk and reward ratio, this all. So these are part of your trading plan that you need to know. That means at the point that you execute your orders, you already have your stop loss in place. You already know where you're going to cut loss. At the same time, you already know where you're going to take profit. Now, many traders make a mistake is they only start to place their stop orders when the market start to move. That means they already bought. Let's say, for example, they bought their FCPO at 2002. Now, once they bought, they did not put their stop orders. But when the market start to move, then only they make their decision where to put the stop orders. Now, especially for beginners, this is the biggest mistakes that you ever made. You know why? Because once you execute your orders, your money already belongs to your opponents. I repeat, many of you make this mistake is because when you execute your orders, you thought that after you execute your orders, then only you make a decision where to put your stop orders. Now, when you execute your orders, your money already with your opponents. When your money with your opponents, please tell me, do you have emotion or not? The answer is definitely you will have emotion because you cannot control your money. So when your money is with your opponents, you cannot control your money, you will have emotion. When you have emotion, can you make a wise decision or not? The answer is you cannot, especially you are not seasonal traders, you are not even those experienced traders, you are going to be caught here. Now, many of you, because this topic is all about fundamental, about futures trading, fundamental. So when it comes to fundamental, many of you are beginners. That's why I just want to highlight to you. Let's say if you have your trading plan and you execute your orders based on your trading plan, your stop loss, you already implement your stop loss before you even execute your orders. You already stated that when you are going to cut loss. Meaning what? Before even you give your money to your opponent, you already have a decision. And this decision is definitely without any emotion. Because you know why? Because your money is still with you. You are still in control. And this will help you. Because once your money is with your opponents, meaning you already have emotion, it's very difficult for you to make a wise decision. So these are all involving trading mindset. That's why trading plan is very crucial. Less people in the industry covering trading plan, honestly speaking to you. There's a reason why Bursa Malaysia identified that trading plans is one of the very important topics that we are going to cover. Another topic is a subset of trading plan, which is risk management. So that's some of the reasons.
Nice, thanks for the elaboration. And about the hedging side, right? So I think hedging will be mainly for the plantation company that they have.
Yes, retails, all of us, honestly speaking, like it or not, you are being called speculators. In futures environment, like it or not, you are being called speculators. Now, one of the reason is because now when we categorize, you see our stocks investment, the actual environment, or how do we categorize the actual categories for investment and trading is based on one of the criteria is based on the time frame. For example, last time before technologies comes in, if you do a trade or you do an investment more than 5 years, then only you consider as a long-term investment. Now, I believe with the advancement of technologies nowadays, if you can hold a stocks more than 1 year, right, some of them, they already categorize themselves as a long-term investment already because of the advancement of technologies. So last time before the technologies came in, right, is anything above 5 years, then only is a long-term investment. Anything within 3 years to 5 years is a mid-term. Anything less than 3 years, or right now, many of them categorize as anything less than 1 year, right, is a short-term investment. But right now, how do we categorize? Many of you will categorize that one day intraday trading is a short-term investment. Then 1 month trading is a mid-term investment already. 1 year already long-term. That's why it's different categories. That's why futures last time not used for people to hold very long, especially for retail investor, because there's an expiration date. Once it expired, you need to move to another month. That's why for futures, technically we consider all are traders, not investor, all are traders. That's why when you categorize as traders, in a way, you will call yourself as speculators. You will not call yourself as investor. So lucky or not, there's the terms being used for futures industry.
I see. So like for for the plantation company, so when they want to do this kind of hedging, so
Yep.
can you elaborate an example? Why do they do that? Why don't they just just get the crude palm oil and then sell it at the day? Why do they have to
That means
do those
when
things?
they do, for example, in what circumstances this will happen? For example, they anticipate that the price might be dropping because they do not know. No one can exactly forecast, let's say 6 months down the road, what will be the price. So let's say, for example, 6 months down the road, they already knows that they are going to sell 1,000 tons. Let's say, for example, 6 months down the road, they already anticipate they are going to sell 1,000 tons, but they do not know what will be the price that they're going to sell 6 months down the road. But at this moment, if they already see that the futures price is something that they find that is fair, what we call as fair value to them at this moment, if they calculate already, they find that current price is fair. So what they can do is this right now they go and sell futures contract first. So when comes let's say fast forward 6 months ahead, let's say fast forward to 6 months already, 6 months down the road, what they do is they unwind it, meaning that they buy back their futures and they really go and sell their physical CPO. So this is one of the examples that they can do, because no one will know 6 months down the road what will be the CPO price, especially commodity prices. Sometimes it might be quite fluctuate. So if at this point in time they find that the price to them is fair, because fair value is how do you calculate by yourself. If you find that this price is fair, then it's considered fair value. So if they find that right now the price already to them is reasonable, or is to them is a fair value, then they will sell right now. Then 6 months down the road, they unwind it by buying back the futures, then they sell their physical market. So in a way, they are doing this to hedge their position. So it's like buying insurance.
Yeah, very good explanation, very good example there. So thank you very much. We don't have more question here. So thanks Ting Ting for showing us how the FCPO works, and thank you everyone. Stay
Thanks
tuned.
a lot, Casey.
Yes.
And wait, this one is just to highlight that this webinar is brought to you by Bursa Malaysia Berhad. So thanks to Casey, and thank you everyone.
Yeah, thank you. So stay tuned for my email announcement for the next upcoming training session about financial planning and hedging. So we will feature Warren Mark, another great speaker, to show you about that will happen after Ting Ting's session next week on Mandarin, on FCPO as well. So thanks Ting Ting. We will talk to you again one more time.
Sure. Thank you very much.
Thank you. Bye-bye.